Welcome to your Flathead Valley real estate market recap. The following stats apply to the month of April 2025. So let's dive into the key highlights across residential, land, and the commercial markets. First up, residential. April closed with 775 active listings and 257 new properties hitting the market. Buyer activity held steady with 130 homes under contract and 105 successfully sold, posting a median sale price of $879,000. 46 homes sold under $600,000, 35 properties closed between $600,000 and $999,000, while 24 luxury homes sold at over $1 million. Land. 451 parcels were available across the valley, giving buyers ample opportunity to bring their Montana land dreams to life. April saw 86 new listings, 64 pending transactions, and 28 parcels sold. A solid month for landowners and visionaries alike. Commercial. The commercial market ended the month with 117 active listings. 20 new commercial properties entered the market, 15 are pending, and 6 successfully sold. Congrats to those stepping into their new business ventures. Status update. On the residential side, 11 listings were withdrawn, 27 expired, and 24 were canceled. In addition to all those lost listings, we had 222 new price reductions recorded in April. As we head into spring, April set the stage for what's shaping up to be a lively, competitive season. Inventory is moving, buyers are active, and all signs point to momentum building as we approach peak market activity. So stay tuned, and if you're ready to make a move, I'm just a call away.
Hey there, everyone. Thanks for joining us. And Ryan, thank you for that market update and the current stats.
You got it.
Today, we're going to be diving into what's really going on in the housing market. Because let's face it, there's a lot of confusion out there. Between interest rates, stock market volatility, talk of recession, and even tariffs, it's no wonder people aren't sure whether it's a good time to buy or sell.
Yes, you've got that right. It's easy to feel paralyzed when the headlines are so dramatic and social media is full of all the noise. But we're here to help walk you through what's actually happening with the numbers that matter so you can feel more informed and confident whether you're buying, selling, or just watching from the sidelines.
There's a quote from Steve Harney that's always stuck with me. Calm down, sit down, think, plan, and act. It's a reminder that real estate decisions should come from a place of thoughtfulness and not panic. And to start us off, I want to share a few data points that might really reassure you.
Can I go first?
Yes.
Awesome. Let's talk about mortgage holders. I want to make 2 points here. First being, what if I told you that nearly 83% of U.S. homeowners have a mortgage rate below 6%?
I probably would believe you.
Here, let me put up a graph that we found from Keeping Current Matters.
Oh my God, this is crazy, right? With all the noise, would you in a million years believe that?
No.
Truly, that means the vast majority of people are not in a financial distress. They're in good positions with low fixed rate mortgages. And that's a big deal, man, especially compared to the market conditions that led to us to the 2008 market crash.
Listen, we can't guarantee that these things won't be challenging, but that right there tells me that homeowners are going to do their damnedest to hold on to these rates and preserve the asset, right?
Oh, absolutely.
Yeah. So it's wild to see this, and even more wild that legacy media outlets won't even report on it. Add it to the list, I suppose, right?
Exactly. Yeah.
Okay, second point. So this right here, Americans sitting on massive equity. Did you know that 39.3% of U.S. homeowners are 39.3 U.S. homeowners own their homes outright?
What?
Yeah.
That's like almost 40%, man.
Yeah, it's a lot. They have no mortgage at all. All right, so that's crazy and all. But let's add to this. We've got 29.3% that are equity rich. That right there, we have a housing market now that is incredibly stable.
So basically, despite what we hear on the mainstream media and everything else in those outlets, people are actually equity rich, and they're really not on the verge of losing their homes as much as they thought.
Absolutely.
Right? And so, these are the numbers that matter. Obviously, there's some demographics of people out there.
Yeah, and everybody's different.
Everyone's different. I mean, they do.
This is very anecdotal.
It is, but the majority of Americans are in a good financial position, which is
the numbers are there.
It's a healthy market. So people, when they come to me like, hey, should I put my house on the market? Is it worth selling or should I wait? I mean, the reality is it determines your situation.
Yeah, 100%. I think my take on it is like, if you find the right house and you can afford that monthly payment, forget all the noise. Don't wait. Don't wait for perfect conditions. Get out there and buy that home. If you wait, that's going to mean that possibly you're missing out on today's inventory and opportunities. I think it was Warren Buffett, he said it best, be fearful when others are greedy, and be greedy when others are fearful.
That's a good one.
Isn't that
And
good?
isn't he like the richest man in the world?
Yeah, I think
Or,
he
you
knows
know,
it.
United States at least.
He knows a thing or two. So I know not everyone is cash heavy or even in a position to buy dips. If you could, you would. And frankly, you should.
So, I mean, I guess the question is, when is the best time to buy?
I think you know my answer, and that is yesterday.
So now I kind of have a question for you. Are you seeing less competition right now? Also, builders are offering incentives and inventory is growing slightly, which means buyers are finally getting some breathing room. What do you think?
Absolutely, I agree with that. I mean, we're even seeing some of these programs here in the Flathead Valley, which brings me to the next thing, the big R word, being recession.
Still traumatic.
Yeah, of course. But it's all we hear. You can't open a newspaper, you can't look at a TV, like recession, recession, recession. And of course, we're hearing it from our clients on the daily. Like, is the recession coming? You know, when are home prices going to drop like they did in 2008?
Exactly. Well, good question.
Yeah.
But here's the truth. Home prices, they've actually gone up over the past 4 to 6 U.S. recessions. I don't know if you knew that.
No.
Only one recession saw a major price drop, and that was 2008. I mean, we do remember 2008. It was a big deal. Let's put that graph up. Let's take a look at what's really going on. Home prices have actually gone up during the last 4 of the last 6 U.S. recessions. Only one recession saw a major price drop, and that was in 2008, which we all remember. The crash was caused by a litany of things, but mostly by a toxic mix of subprime lending and overbuilding, which in today's environment is not doable anymore.
No. And people hear recession, and naturally, they immediately think prices will crash because of what we saw in 2008. I guess that wound cuts deep.
Well, it does. The thing is, I mean, I remember it. It was a big deal, man.
Yeah, it was terrible. But what's interesting is that is the only time in American history that something like that has ever happened. And pending an alien invasion, it's likely.
Hey, they could be coming now.
I mean, I hope.
I mean, I hope they are.
So really what we are seeing right now is price moderation, not a crash. The market is finding its footing again, and after this wild pandemic surge, it's not a bad thing. It's actually healthy. What I'd like to add to that is that historically recessions create falling mortgage rates.
That's very true.
Yeah, I think we got a graph on that. Let's see if we can slide that up.
Slide that graph up, man.
So clearly, I can't guarantee anything. Full disclosure, we can't guarantee anything. But when you look at the historical data, history tends to repeat itself there, right? So it's hope that we can weather this, and mortgage rates could potentially go down, and home values hopefully will remain at their value, and we won't see that crash that we are conditioned to expect.
I hope not.
Yeah.
So agreed. So let's talk about home inventory. Why don't you throw that graph up there real quick?
Sure thing.
If you're looking at that graph, there's a yellow line kind of in the center there. That's like where March 1st of 2025 started for increased inventory. Once again, I want to let you all know, this is national averages.
Yeah, thank you for saying something.
Yeah, it's not that the Flathead Valley doesn't follow some of those, but we want to let you all know that all these stats are the nation as a whole.
Yeah, and that's everything that we've done today.
Exactly.
So March saw that 17% increase in inventory year over year. And, if that trend continues the way that this graph is showing us, we could end 2025 with inventory levels very similar to 2018 and 2019, which we then and now would consider a balanced and healthy market.
Yeah. I mean, that sounds a lot better.
Yeah,
I wouldn't mind going back to that.
100%. I don't think anybody would mind going back there.
So another thing to note, let's throw that other graph up there about new home builds.
Sure thing.
What I'm seeing right there is that 31% of inventory is actually new home builds. And I mean, I don't think that they're going to go up too much more. I think builders learned their lesson from 2008. I really do. And so if that does happen, of course, we're going to have way more inventory than we thought. But I think it's a great idea to jump into a new construction loan if you can, or a new construction build. First of all, you're getting a brand new house. Builders are right now trying to offer incentives to purchase those and offload that inventory. That's what I would do.
Yeah, I mean, if you're shopping for a home right now, don't overlook these new builds. Builders, they're motivated and they're offering closing credits, interest rate buy downs, all kinds of upgrades. Terry Homes.
Hey, you know what? They've got a great one though.
Yeah.
I mean, it's like in the upper fours, and we don't see that very often.
Yeah, they all got homes that got to be sold this spring and summer. What about sellers?
Well, when it comes to sellers, basically, you got to look at that. So if there's 31% of inventory of new builds, like that's a big healthy chunk of that market. So there's like not as much resale out there as maybe people think. You know, it's something I was just kind of thinking about. It's a speculation, but like we do have some good inventory out there, but there needs to be more.
Yeah.
That's the basis of what I'm seeing here, is that if it's going to be a moderate market, we still need to have more inventory.
Yeah, of course. So I think we should wrap this up.
Okay.
All right. And this has been awesome. A lot of great information. Sorry to dump it all on you. I think the goal of this, though, was to clarify some things and make it a little less confusing and not so scary. But to summarize what I took away today is that most homeowners are financially strong.
Yep.
Okay. Something I didn't fully know.
It made me happy.
Yeah. Also, equity is high across the board. You know, that falls right in line with them being financially strong.
More than I thought.
Yeah, way more. Inventory is rising. It's not spiking.
No.
It's getting where it needs to be. Prices are moderating. They're not collapsing. The sky is not falling. And the builders are active.
Yep.
And we're seeing that across the nation, and you know, locally, we're seeing that as well too.
I agree.
We're seeing a lot of hammers being swung. And last thing, buyers are still out there. So if you're scared to list, don't be.
We know for a fact there. Holly just left to go show a couple of our properties.
Exactly. Don't think we forgot, Holly.
No.
Shame.
So you know, a lot of takeaways here, but really the core message is real estate is resilient.
Yes.
It historically has been. It will continue to be. And what's most important is working with someone that really understands the market and can navigate you through these tough times or perceived tough times.
Yeah, I mean, and the stuff we're actually presenting, like we're regurgitating a lot of this, like you know what we're hearing, but from like reputable sources.
Yeah, it's all
like these are credible sources that this is the stuff I needed to hear to actually be able to sleep, right? I mean, like, because I mean, I'm a real estate broker, you're a real estate broker, like it's like
Whoa, not yet.
soon.
Yeah, it's coming.
He's still a real estate agent, but that's
Just
okay.
an agent.
Soon.
So keep watching. We're going to continue to keep rolling out stuff like this and keep making updates and hopefully put your mind at ease. This has been a fun one.
And hopefully we'll have some newer information in the next one. Like I mean, there's going to always be a shift and a change. I like that you said that. Like real estate's, you know, it's ever evolving.
Absolutely.
So
Thanks, guys.
thanks a lot. Have
See
a good
you
one.
again soon.
See you next month.
All right.
Boom.